this came from Katie in Sherwood Park. She writes, "Good morning, Dan. On one of your older videos, you were talking about the different profits. I think you called it paper profit. Can you elaborate? Because I have my financials back from my accountant. And even though he told me we had a really good year in spite of the pandemic, I still don't have very much money to work with for my spring and summer buys that are starting to ship right now. Thank you always for being available to help." Katie. Good question, Katie. Awesome. Really good question. And while I said to Miss Katie, you're not really missing anything, I do talk a fair bit about the difference between what we call white paper profit and cash profit. Okay. And your accountant provides a financial statement built on the paper profit. This comes from the accrual method of accounting. And the biggest misleading factor or metric in accrual accounting is cost of goods sold. And your accountant, I'm going to stop for a second. This is not a slight or a slam on accountants. This is a principle of Canadian accounting. And I love accountants to death. They're the best history teachers ever created. But your accountant only measures the cost of what you have sold, not the cost of what you have bought. And in our world, we should always be measuring the cost of purchase because it has the biggest correlation to our cash position, our cash flow. And retraining our financial brains to think in terms of cash accounting is where the difference comes in. Building budgets in your store or creating a budget for your business based on revenue in and cash out, i.e. purchases, is imperative. And we use a break-even analysis that's foundationally based on the purchase volume to help a retailer get better understanding of their true position and projection in a business. Now, before I kind of go further, I'm going to go back a step and explain sort of the difference between what we see on your financial statement under cost of goods sold and what we should see is as cost of purchase. Cost of goods sold is a calculated number that measures only the cost of what you've sold. So when you sell a shirt to someone, accounting only picks up the cost of this one shirt, not the 20 shirts you bought, right? So cost of goods sold is really a calculated number. It starts with how much inventory you opened the year with, add how much you bought, take away how much you're left with, and that's what your cost of goods sold is, which then delivers a margin number. It takes revenue minus that cost of all the goods that you sold, and then leaves you with your gross margin dollars, which you operate your business or pay your expenses with. And this is where the biggest mistake comes in when we sit down and start to talk with retailers. They don't have any money because they've been coached all along to look at cost of goods sold instead of cost of goods purchased. And cost of goods sold means that your inventory is an asset, not a liability, right? Inventory for me is a liability. It's this perishable thing floating in your stockroom that represents cash tied up in your business. And as Katie sort of alluded to, her accountant's giving her the high five. You had a great year. You know, you're 13% net income before tax. Woo woo. Well, 13% before tax means, you know, if my tax rate's at 13%, I'm not making any freaking money. And she doesn't have any cash in the bank. It's because her cash is sitting in her purchases, right? Not in cost of goods sold. So we've got to really refocus ourselves, and using a break-even analysis that's foundationally based on purchases, not on cost of goods sold, is how we get retailers this better understanding of their true cash position, and more importantly, Rob, their cash projection. It's more important to know where you're going than where you've been. Right. Memories are a great thing, right?
Yeah.
The lust, the lure, that comes from where I'm headed, not where I've been. And understanding how your purchases impact your cash or your cash profit allows us to better plan your store. And so for Katie, we talked about, let's go ahead and run a break-even analysis on your store. Let's get you, we're going to use that financial statement that the accountant prepared. It's great. It's a great document. Both the income statement and the balance sheet tell us a lot about a business, but it doesn't tell us about their cash position necessarily. It's a historical look at what cash was, when your year ended on December 31st, but here we are rocking through the middle of April and you don't have any money. Let's figure out why that is. So, we set up this break-even analysis for Katie that really allowed her to see exactly where her break-even point is every month, every quarter, every year, and more importantly, where her cash would be outside of, the taxes payable that her accountant might show her. And so for anybody that wants to take advantage of understanding that break-even analysis, head over to thewealthyretailer.com. There's more about break-even analysis and retail business analysis available over there.
Yep.
And, inside of an hour, we can really give you a better, clearer understanding of not just, where your cash is today. Because like I said, it doesn't matter. What matters is where your cash is going to be tomorrow. And we've got to have a plan, that protects cash, that fosters growth in the store. And part of that growth has to come from purchasing. So we've got to have a better handle on that. And so again, not a slight on accountants. They're doing a great job. They do what they do. They're the best history teachers in the world are accountants. But you really need to be managing your business from a cash position, not a profit position.
My accountant told me there's 3 types of accountants, the smart ones and the dumb ones. And anyways, Dan, there's got to be other questions. This is such a great example of, I'm sure there's retailers that, frustrating, struggling with, I'm hearing one story from one source, professionals and source, and so great answer on that. And as you said, you've got more info on that. How do folks get a hold of you for any other questions that you might?
Listen, this was a question that kind of came from Katie not really referring back to a video from a couple of years ago where we did an example of, white paper profit and cash profit, and remembering that hey, wait a minute, there's different kinds of profit. And she sent that question through to Dan at thewealthyretailer.com. We had a great chat. We did that break-even analysis that helped her better understand where she is today, but more importantly, where she's headed tomorrow and what she does need to sell to be at break-even. And break-even is that place where, we don't make or lose money. Important to know where that is. So yeah, any question, I've said this before, Rob, no topic is off limits. I'm like everybody, I have an opinion about something, and I'm going to tell you that it's based on, my own successes and failures as a retailer, but also on the best practices of the, literally hundreds of retailers that we have the good fortune to work with.
You're at the core of so many conversations, the good, the bad, the indifferent, and like you say, get the value out of that for anyone.
And spending 30 years as a retailer has really allowed me, as I said, to find success and a lot of failure. And failure today is imminent for everyone. And failure is just a setback. It's just a roadblock that we overcome. We only ever fail when we give up, right? And so having lived through that in my retail life, and vicariously living through it with this connected retail family that I'm in, really does give me an objective, perspective on a lot of these questions that come in. And I rely on, there was a question that came from a retailer that I think we're going to do on the next podcast that I actually had to go and ask another retailer for the answer. Okay. That I wasn't sure I was going to give this girl the best advice. So I went to one of my retailers and said, hey, I got this question in. What's your take on it? Yep. And it turned out that we were somewhat aligned in our view, but that's the power of having this collaborative environment where you can reach out to more than one person. I just end up being a gateway for information sometimes. I don't know it. There's a lot I don't know, man, in retail, and every day we're learning something.